Good morning, good afternoon, or good evening, wherever you're joining us from. Welcome to the very first episode of the Clearing Spotlight Liquidity Arena AMA Series. Over the past year, we've witnessed one of the fastest technological shifts in history. Not long ago, AI was primarily helping us to write code and search for information. Today, we're entering a new era of the AI agents. AI is no longer just assisting human decision-making. It's beginning to make decisions, take actions, and increasingly participate in financial markets. Some believe AI will become every trader's most powerful co-pilot. Others believe AI will eventually become the trader itself. If that's where the industry is heading, it raises a much bigger question. What does the future of trading look like when AI becomes an active market participant rather than just a tool? And perhaps more importantly, is today's financial infrastructure actually ready for AI native trading? These are exactly the questions that inspired Liquidity Arena. Created by LTP, Liquidity Arena is the world's first live AI quant trading championship designed specifically for AI agents and autonomous trading system. The competition officially kicked off on July 20th, bringing together developers, researchers, quantitative traders, and institutions from around the world to explore one simple but profound question. What does it really take to build an AI trader for real markets? The competition features two tracks. Track A, Logic Frontier, where AI agents are the decision makers behind every trade. And track B, Liquidity Pro, where professional quantitative teams compete in live markets to pursue superior risk-adjusted returns. But tonight isn't about explaining the competition rules, it's about something much bigger. It's about exploring how AI is reshaping trading, what challenges still lie ahead, and why many believe AI native trading could become one of the defining transformations of global finance over the next decade. Let's get started. It's my pleasure to introduce guests Bing Zhang and Lony Li from LTP. Bing is managing director at LTP. His career spans 2 decades of trading, FX options at Lehman Brothers in Tokyo, volatility arbitrage at the hedge fund Old Lane, proprietary trading for Citi out of Hong Kong, and later his own fund where he served as CIO. He came to crypto early, first through mining, and went on to run crypto options trading. Lony Li is our resident expert for AI at LTP. His career spans 11 years across algorithms, systems, and hardware, beginning with Hikvision Research Institute, where he helped build the world's first deep learning, high-performance cameras and servers. He went on to develop a complete model compression stack and tape out 5 AI interface chips with 20+ top-tier papers and 32 patents to his name. An expert member of IEEE 2941 and JPEG AI, he co-authored the first global standard for large model deployment. Welcome to you both. So let's start in on the discussion. The kind of first broad topic that we want to talk to is AI traders are coming. It's coming, traders are everywhere. So maybe I could start with a question for Lony. Everyone seems to be talking about AI agents. What's changed over the last 12 months and why has the conversation shifted so dramatically?
I think the last 12 months, we experienced a very, very exciting change of the AI. And I think they have 2 categories of big changes. The first is still the continuous at the rapid improvement of the model itself. I think the most notable moment which touched me is around the Christmas time at the 2025, the last year. And when the Ops 4.6 from the Anthropic first give me the sense that the model capabilities has crossed the threshold of the practical, and we can use this to do some real jobs. Short after, the release of the Fable 5 pushed that capabilities even further. And the Sonnet 4.6 made it available at much lower cost. So more recently, the open source models like the GLM 5.2 and the Kimi K3 have continued to impress us. The model capabilities is no longer the bottleneck of most application scenarios, I think. The people now have the bandwidth to think about more complex and higher order applications problems instead. And the second category, I think, is the progress in the development of the agent architecture itself. A year or 2 years ago, most of the industry's attention was focused on the model itself, and the surrounding frameworks like agents or harness agent did not get enough attention. But over just the last 6 months, I think, with the rapid development of the model itself, I think the harness architectures has advanced rapidly too. And to point that, I think today's agent system are now is very complex. And this is dramatically improved the experience of us to using AI agent to solve a real problems like trading. And the cost have gradually come back down to manageable levels. And these two trends, I think, reinforce each other. A stronger model give harness designers the confidence to hand agents more decision-making power, and multi-step planning, the train tools course, well, a more mature harness lets the model capabilities be fully across surrounding systems.
Very interesting. And so, kind of in summary, there is a tipping point of capability, cost, and hardware, which makes the equation, viable for use cases like trading. This is super interesting.
Yes.
And then I guess following that, maybe a question for Bing. Some people compare today's AI agent moment to the early days of algorithmic trading 20 years ago. Do you agree? And what, in your opinion, differentiates AI trading from algorithmic trading? Are we witnessing another major shift in trading and market infrastructure?
Yeah, I do agree that this is a fundamental change. It's definitely comparable to the algorithm trading, started about 20 plus years ago. The only difference is that the AI trading probably will come a lot faster than algo trading. Of course, you can look at this problem from different angles, but I'll try to explain it from the workflow perspective. Let's start looking at the input. For algo trading, I think most of the algos or strategies rely on all these time series data, the price, the trading volume. At a later stage of algo trading, people started to extend that data input to alternative data such as satellite images, and also these language-based modeling, NLPs, natural language processing. By definition, I think AI is multimodal data. It can handle that pretty natively. So that's major difference. That changes how people or trading firms use or store their data. And in terms of how to process this data, for algo trading, I think people pretty much rely on these well-known, well-understood statistical models, regression, or these advanced machine learning algorithms. But for AI, I think it still pretty much remain as a black box. There's like trillions of parameters, and it's very hard to figure out what parameter plays what role, or which component of the model play what role. So there's a harder level of explainability for the AI model for the algo trading models. As far as the output goes, I think for the algo trading, I think output is very clear. It's basically just a buy-sell signal or no trade. But for AI, it speaks like a human being. So unless you harness it properly, otherwise you have to use the AI output properly. That's a very hard job as well. If you look at all these workflows, they apparently have very different features, and to what extent that these differences will make a big change to the industry, I think, of course, affect how people use or store the data. How do they evaluate the problems or the models, and how do you prepare human resources, right? Because now the AI takes a large, heavy part of the job. Now, what extent the human traders or analysts play a role in this? So the average trading firm will have to think very hard in terms of how in the AI age, how do they run their firm? So that's going to be a big impact on the industry.
Interesting. So in summary, quite a lot more complex, and probably quite a big shift in market infrastructure. That's interesting.
Yeah. And I still think that they probably solves more problems than create more. So that's the good news for us.
That's good. And you mentioned earlier about you thought that the speed of AI development would be much faster than algorithmic. So as a prediction, do you think we'll see the world's first $1 billion AI managed investment fund in the next 5 years, or longer, or nearer?
Yeah, I think if you only look at the technology itself, I think most people will agree that in 5 years, definitely, AI will take over some of the asset management roles. I mean, $1 billion is only probably just a starting point. But I would extrapolate the problem a little bit further. I think the human society relies on chain of trust, right? So at the lower end, a lot of decisions are already made by machines, robots, or models. But if you go up the chain of trust, I think we're still pretty early. Like if you look at how much resistance the FSD has been facing in front of the regulators, you can understand that, for human to give up some of the decision making authority to AI or to robots, it's going to be a very difficult process. For FSD, I think technology has matured 5 years ago probably, but still they're not on the road yet. So for AI to really start managing independently from any human intervention, for size of $1 billion size fund, that's actually depending on how the human society governance structure change. Will we really let AI to make decisions for us? What are the risks involved? So there's a lot of things. The technology is very, very much ahead of the legal framework. So so we just have to wait to see.
And there's a bunch of stuff in there about explainability and regulation. I'll come back to that a bit later. But in that complexity, is there anything? And this is a question for both of you. I'll start with Bing. Is there anything that the industry is massively underestimating? Is it that complexity, or is it something else? What do you think?
Yeah, I think overall for AI, I think people are still in this, maniac chasing for the compute and size of parameters. I think people are still underestimating the risk involved. I mean, the issue of risk control has caused a few outbreaks at OpenAI, at Google. A lot of people left because they disagree with the management on these risk control issues. I think for financial industry, that issue will be more pronounced. $1 trillion wealth will be at risk if we don't do risk control right. I mean, here is no longer just the market risk, right? We're adding a layer of model risk. Or what if the AI being naughty and just not serious about what they're doing, or what do we assign them to do? So I think that risk is way being underestimated.
The Skynet Terminator risk for finance.
Exactly.
Perhaps I can coin the phrase. To you, Lony, what do you think is what the industry is underestimating about AI?
I think the industry itself, most of the people in this industry know lots about the AI. And rather than to say that underestimate, I think it could be said, be caution. Lots of people are very caution about the AI. The people today, we say AI, they are mostly thinking of the large models like LLMs. But the AI actually also included a very huge amount of small scale models like the earlier machine learnings and the regression models, or LSTM, CNN, and multi-layer perceptions, and so on. I think from the application standpoint that today's large models are naturally suited for the high reasoning, low speed scenarios, and may not for all the scenarios of our industry. We don't know. Maybe someday they can. And there's also a deep mismatch that I think many traders believe that the real value of the trading come from catching outliers. Technically, it's a very long tail signals. Extract the outliers signals out of a low signal to noise ratio data, I think. But for large models that it designed for fundamentally towards the low frequency component, they are learn the pattern that extracts from the universal, the generalized the regulations from a massive amount of data, I think. So in principle, that's an opposite instinct from the outlier huntings. So the bridge of the two requires a very important and need a very specifically designed, I think, to make a trade-off architectures. And it doesn't come for free. It may take a lot of people, a lot of person to learn to make a very explicit design. So I think that's exactly why a true AI native trading systems cannot just warp large model around a strategy. It needs a hybrid architectures, and it has not existed today.
Interesting. And you mentioned doesn't come for free. We think I got some questions later for you about the looking at the total cost. I can come back to that later. So, but to kind of carry on, thing maybe with you, maybe the layman might assume that the only cost of trading is the cost of running the compute.
Yeah.
Can you explain what other costs might be for AI?
Currently, the main cost is truly the compute. For these questions, I like to make a compare with another industry. It's called the mobile telecom industry. From about 20 years ago, we experienced the 1G to 5G. And the 1G gave us the capabilities of calling some people. And the 2G gave us SMS. And 3G bring us the photos and the videos. And 4G made the videos cheap enough to give a rise of the smartphone cameras. Just like the telecom development, I think for AI for trading, still needs over, I think, 5 to 10 years to develop. So compute and the storage is just the infrastructure cost. And for now, it remains the main core. But I think the real weight will shift to, I think, the data build out. Data is the most important things in training the large models. And the compliance and the risk management, it may cost a lot. And the high performance agent software, yeah, it's also very important. And the assemble the top cross disciplines talent, people is so expensive. So I think those the harder and the costlier layers to build. And now it's just the first layer. Just like the 1G time and 2G time of the mobile. The 40 back cost of the AI trading actually lives.
Right, interesting. And you're right. I mean, in one respect, a lot of the cost of data that's gone into the models so far has been relatively free or freely available, even if it wasn't free.
Yeah.
And that kind of brings the question about, kind of what the full ROI or the full payback of AI is. And so there's a general debate in the kind of AI community, which is that, compute costs are being subsidized by VC investment money. Lots of people, IPOing and getting some investment company investment funds. But eventually those VCs will demand a return on their investments. And that may drive up the cost of AI. And so my question to you is, do you think that will happen sooner? Or do you think that the scale that will be generated by all these AI investments will produce a kind of a unit cost fall, which means that we won't get to the point where the drive of cost going up is overcome by the scale cost, unit costs coming down? What do you think the balance is there?
I think the VC's demand and the develop of the AI is just a two racing car. They're all very very fast. I think still a lot of VCs are very anxious for their returns. And I think we will see that fairly often over the next few years. Every VC is anxious of have I do the right investment and I want to see the returns. It's very often. But overall, I think since the Ops 4.6 came out, myself, I have no longer doubts about the long-term direction of AI. I think it's right. We get a right direction of how to develop that. And based on the progress of just the last 6 months, I believe the AI reach a point where even if the VCs are still impatient, but I believe that AI will get the willing to be a bit more patient, and they will generally see the real returns. And it's just a bit like the dot-com crash in the 2001 to 2002. At that time, a lot of companies' market price have down dramatically. But after that, these companies repelled their market price, and nowadays a lot of them have become a very powerful companies right now, like Apple's, like Amazon's, that. And I don't think the AI's development still broadly follow the Gartner hyper cycles will reach a peak and dramatically down. I think the down will be slightly, not so dramatically.
It's interesting because I was going to say that the trough is part of the cycle, and people talk about AI company share prices are going to crash, and etc. But
maybe,
it is
maybe a little crash, not
a little crash.
Dramatic crash. Yes.
It is the cycle. Interesting stuff. Okay, cool. Super interesting stuff about AI itself. Maybe now we can kind of shift topics a little bit. Question of trading broadly, rhetorically. If AI is becoming the next generations of traders, then probably we should ask the harder question of, can AI replace traders? Is the kind of the next topic we want to go to. So I think, Bing, to start with you, do you think AI will replace human traders, or will it simply become another productivity tool, another thing that they can change how the way they deliver trading?
Yeah, in my mind, I have two answers for this. One answer for short term, and the other one is for long term. I think for short term, I don't think AI will replace human traders, simply because in current state of the world, we still attribute responsibility to humans. No one is able to change that for now. So, and also as far as individual traders are concerned, there's a pain point for human traders, whereas you don't do a good job, you're not serious about your job, your work, then you might lose your job, and your life will be affected. Your kids will not go to the good schools anymore. You can't take a vacation every summer. Pain is felt by human, but the AI don't feel the pain. So you can't simply incentivize an AI to do a good job, or on the other hand, you can't effectively penalize an AI. So from the owner of any trading firm, if you can't attribute the responsibilities, then you can't make up an incentive program to encourage people to do a good job. So because of that, as far as that moment doesn't come, the humans will still taking the decision-making role for as long as it lasts. But in the long run, I have a very philosophical answer to this. I think in the long run, marketplace as a place where people transfer capital and the risk will simply disappear if the world is driven by AI, which will make the world simply like homogeneously flat, right? You move your capital and the risk to the place that's necessary instantaneously by AI. Now, why do you need a place like marketplace to move things, and letting alone that the human will have to involve, which are super expensive? So I think trading as a profession will disappear. Marketplace as an industry probably will disappear, and AI will probably take up the job of moving risk and the capital to where it's necessary.
Yeah, simplistically, trading is not the end in itself. Actually, the end is someone who needs capital or someone who needs return. And this is a personal, humanistic kind of outcome. Trading is the delivery of it. Yeah, so we could probably get into the philosophy of it, but not for this call. Maybe I can turn to Lony in a kind of like more technical kind of nature of the same question. Everyone claims to be AI native, but from your perspective, what actually makes an AI trading system AI native?
Actually, I want to tell you that I don't know what is the real AI native systems either. But some people that just simply plunge an LLM and to the existing systems and treat it like an advisor. That is not the AI native things. I think a truly AI native trading systems, even I don't know where is the end of AI native trading system, but I know that it must have some kind of subsystems like the data pipeline, the risk controls, execution systems, and the monitoring. It is the same as the human systems. We need this system, and also AI need this system too. But what's that like in the AI style? I don't know. It designed from around the agent. We must design it around agent systems and not just a suggestion box. It needs to really join the execution process. And a real AI native systems is hybrid. The fast statistical or a small model method handled of high frequency outlier detections in a low signal to noise data. I think it's very important. And while the large models handles a slow layer of reasoning, explanation, and the strategy level decisions, I think to make a whole systems. I think, but there is one more pieces. I think the most important and very easy to underestimate is that industry data and accumulate domain experience. This is a very slow work, needs a real vertical mode that cannot be shortcut. And no amount of model capabilities or clever architectures substitutes for years of accumulate market data and the edge cases and the hard-won trading experience distilled into the systems. I think a real time to build, and it's arguably the deepest and the most defensible part of what makes a system truly AI native. It's really hard to answer these questions.
Yeah, interesting. So we're not quite there yet, and actually still some time, and there's a hard road that you have to walk in order to get your data and domain experience.
Yes.
And so again, if I can then kind of trip from that question or that answer to the next question, which is, there are institutions that are already using AI, and yet almost nobody lets the AI make the final decision. So even if we had the AI native, a lot of people today probably wouldn't let it make the final trading decision. And so, is it that a lack of data and accumulated domain experience, or is there anything else that's holding back the industry?
As I mentioned, I don't think the institutions underestimate anything, and they are being very deliberate about handling a major divergence. And the one I brought up before that is the small scale AI based on the things like MLPs and LLMs is already widely deploying in trading. A lot of people use this to earning monies. But the training data and the ground truths behind those algorithms are truly the crucial things, need a very carefully designed. I think letting the LLM participate in the final decision require that the same kind of things. I think the biggest obstacle is a really twofold: insufficient data and a set of fundamental algorithm programs, and that is still being worked out. Yes. And I think on the data side, the high quality decision level data that actually labels why was the trading decision right or wrong. This is extremely very important, and nowhere close to the scale of text data used to train general LLMs. And on the algorithmic side, that we still lack mature solutions for giving the LLMs decisions verbal confidence level, and for avoiding the overfitting to the spurious patterns in low signal noise environments.
Wow, it's super interesting. And actually, we have a question later, I think, for explainability and the regulatory side, which absolutely plays into that, defining whether the trading decision was right or wrong. But we can come back to that. Maybe I can shift over to being kind of related to this trading decision being right or wrong and explainability. I mean, if the AI agent makes a mistake or loses money for the strategy, who do you think should be responsible for the loss?
Well, I think at the current stage, the guy who's using AI should be responsible for the error, for the loss, because AI right now is still playing just the trading assistant role or analyst, right? They are only providing their advice to you and you decide to trade it, then that's the guys who should be held accountable for that decision. But I think a bigger question is, once we apply AI inside in this industry, really who should be held responsible for it? Because we will have AI not just playing a analyst role or a trading assistant role, they are actually taking the driver's seats. I think it's probably comparable to the FSD, the full self-driving, where you might ask, who should be held responsible when there's a car accident? Is it the car owner, or is it the software producer or the car manufacturer? The insurance company need to know, otherwise they don't know who to pay and who should be held accountable, or who they receive a higher premium for the insurance. The companies are involved will be like the genetic model provider, which is OpenAI or Anthropic, the company who does the harness, for example, Palantir, the asset management company who actually signed a contract to employ these AI models. I think it's going to be a hot issue. I think this will have to be solved before the first $1 billion fund to be launched, for sure. But who exactly is responsible for this? It has to be case by case. It depends on how deep the problem is. That's the best I can say right now.
And it's interesting because you've walked up to the line of there being either a nominee trader or a nominee company. In the FSD example of driverless taxis, the company's still responsible for the taxi. But do you think, can we step one step further than that line and say, do you think there'll ever be a future where decentralized, autonomous, like DAO-like agents for trading would be trusted? As this is in crypto, everyone talks about it's a DAO, it doesn't have any human or legal form. You just trust the code. Do you think that's ever going to happen in the future?
Well, I think it's already happened. We have a lot of these Web3 trading bots online. Some of them are fully autonomous. They will trade on this decentralized exchange, like Hyperliquid. Hyperliquid has its own vault, who does the market making, where the strategy is, maybe the strategy right now there is not fully decentralized. It's still maintained on the private server. Yeah, there are other cases. For example, if you want to do the new currency investments, where you can put in a DAO-like vault, they will trade, do the call writing or pull writing strategy for you. So it's already happening, but can it go up the size? Depending on how mature the AI is. I think AI definitely makes crypto trading massively better. Without AI, I think most of the strategy I saw online in the Web3 format is not fancy. Some of them doing funding rate arbitrage, but with the AI, I definitely think that it can gain a lot of trust from investors for sure, and also Web3 help people to isolate the risk from capital being stolen. That's it make things even better. I think the combination of Web3 and AI will make the decentralized investment and trading strategies a lot more interesting than before, for sure.
My point about whether you would have truly decentralized, so there was no authority. In the case of Hyperliquid, you could still try to sue the founders and the developers of Hyperliquid, but in a truly decentralized now, there would be no legal persons or physical person to try to sue. And then that brings us to the question of, when you look at regulators and their view of an entrustment of an order to a person or an agent, but the entrustee that you're entrusting it to is not a person, are we then thinking about this in the terms of self-directed trading? Is the employment of a decentralized AI agent likely to be viewed by a regulator as, hey, you're just self-directing your own trading as the retail investor? What do you think about that?
This is similar to the first $1 billion fund. Will the progress of AI going up the chain of trust or chain of responsibility faster enough for the regulators or the government to adopt it? Web3 apparently hasn't been a great success. It might change, but for now it's not a great success. But AI, I think, is making the second try. I think it really depends on if the technology is mature enough to demonstrate that the risk management, everything is super aligned with the human interest. I think it will create a faster adoption by the regulators and government. I think it's possible. I think definitely that's the way to go. And eventually, I, as a carbon-based human being, I like to be world be managed by the silicon-based agents, not Donald, the POTUS, the current protests. I hope it will come true. I hope it come true sooner with enough sufficient amount of security and safety. Yeah.
So you're a Bitcoin maxi, believer in self-hosting, autonomous, kind of or self-directed.
Correct.
Decider of your own financial future. It's all good. Let me ask kind of the same question, but from an opposite angle, which is you have trading experience, and so your use of AI, what one could claim was in some way you have an advantage, meaning the AI matters less in some respect. How realistic would it be to expect a person with zero trading experience and also no, experience of AI, like Lony has? How realistic is it to expect that they could use AI to effectively make a decision? What do you think?
Yeah, I don't think the level of AI knowledge is that a big deal to average investors, especially to retail investors. If you open any investment or trading app these days, they have these all kinds of technical indicators there already. A lot of people made a good fortune by simply trading the moving average. I mean, how much do they understand the fundamentals? Not really, right? But as simple as a moving average can make you a fortune. So for AI, it's the same thing. But I think here is a challenge for the application companies, which is you have to make the AI easily accessible. I think if you make the accessibility friendly enough, just like how we show a moving average to the average investors, I think average people with average education will be able to pick it up. I mean, you have to understand the language, right? You have to understand numbers, the algorithms, you know the arithmetics. So as long as you have these things, I think we have to admit that trading has a lot of the element of luck in it, right? That the time you pick the trade, the model you pick, some of them involve a lot of luck. You have your own way of using AI. I think moving average is probably the most effective strategy for the average trader, and they make money. I think they can utilize the AI a lot better than some of the experts. And also, I think a tool is the same in front of everyone, but just like chopsticks. Most people use chopsticks for eating, right? But some people can use chopsticks to open a beer. And some people can use chopsticks to kill people. I mean, professional killers can use chopsticks to kill people. So, of course, I think the more professional proficiency you have, you'll use the model better and make more money, but you can simply just use chopsticks to feed yourself. That's no problem at all.
And interesting you say, a lot of it's luck. Of course, there's an element of maths and there's an element of IT, but of course the third element is insights. And so maybe I can kind of turn the question to Lony, which is, people assume better models automatically mean better trading, kind of more insightful understanding of the markets. I mean, do you agree? You think that's, or do you think something else is more important?
Actually, I of course believe that the better model means the better trading. But I think the real question is better at what? A general purpose large models like the GPTs or the cloud, they are very strong, they are very good, but they are performs at general benchmark state set and the leaderboards or arenas by the same statistical logic. I think if a model performs well specifically on a trading data set or a trading arenas, then I think naturally it will trade well. ImageNet in the CNN or the MMLU at the GPT time, we don't have such a benchmark nowadays at the trading. So actually need to be measured a real risk, adjust the P&L or drawdown behavior or the robustness of under a real market noise. Maybe we need to build such a benchmark or hold the arena, just like the liquidity arenas, to let the models to make competitions in this environment and let it become stronger and stronger, then it will be better. And if someday the models be better, it of course will be stronger at the real market.
Yeah, I mean, this is exactly what we're going to be getting into in the next topic of liquidity arena. Super interesting stuff. Before we get to that, one last question for being on the trading side. What extent will AI agents exist autonomously and decentralized, other than for crypto and on-chain RWA? And kind of conversely, do traditional assets such as equities, debt, metals, and FX need to come on chain before AI agents can be fully maximized to trade those markets? What do you think?
So I think for the first part of the question, I think the AI agents, would it exist autonomously? I think, yeah. For AI, all these asset prices to them is by and large, it's just a time series, right? So adding 1,000 more time series to them is nothing different from the first time series they manage. But of course, every asset class will have their own feature. But the barrier for understanding for AI, I don't think that's an issue. For example, like FX, certain FX are not deliverable, right? For like China renminbi, Korean won, they're not deliverable. They can only trade it in the form of NDF or offshore investors. But these differences are minor in the eyes of AI. But do all asset class everything need to be moved on chain or to be managed by AI? That depends on what is the necessity to move them on chain. And I think there are, of course, successful cases like equities right now is a big change. Every CEX and DEX are listing the equities, whether in the form of cash equity or perps. That's a big success. But there are also like failures. For example, people were planning big size of listing these properties to make them RWA, and people and investors can dice them into small pieces and own a small piece of property at Beverly Hills. But so far that hasn't been that successful, mainly because all these legal obstacles. For the second part of the question, really depending on the necessity of it. If you're looking for liquidity, so people can trade freely to maximize the utility of AI, then you have to ask yourself, where's the liquidity coming from? For properties, definitely there's no liquidity at all. No one will risk their capital to provide liquidity for these assets, highly illiquid assets. But for certain things like equity, where people now have 24/7 demand for trading and risk management and liquidity, and the asset itself is high quality, yeah, absolutely. I think for equities, I think the TradFi will probably move towards the cryptos, but there are certain things that will probably converge in the middle, and some things will just stay offline, will never come on chain. This is just useless.
Yeah, I mean the liquidity question. I think one reflection could be one of the reasons there isn't liquidity is because people aren't looking because they're perceived to be illiquid. And perhaps an AI agent that was, awake at 3 a.m. might see a price discrepancy for an illiquid asset, and it might act on it, and by that event might generate activity, which then begets more activity. But again, this is all the conjecture and the debate of AI and what it brings in composite. Anyway, thank you both. It's super interesting insights so far on the AI tech itself, and then the component of trading. Kind of moving into this new era and rhetorically, talking about Liquidity Arena, why we're launching the competition now. When you were designing Liquidity Arena, what assumptions about AI trading did you intentionally, want to challenge? Why wasn't another traditional quant competition enough?
The first phase of the track A, we introduced the P&L net of the AI cost as a reference metric, and along with the usage statistics, like the number of the LLM requests per trade and the prompt interaction longs, to give us an initial data set on the real cost and the resource consumptions behind the AI-driven trading decisions. And beyond that, we chose not to constrain things. We want the participate to have a room to actually use their imaginations. And I would not say that traditional quant competitions fall short in any way or some way. And we are not trying to position ourselves against them. And it is more that we want to bring more open lens to the question and see what emerges when the cost, the resource dimensions of AI decision making is made visible rather than assumed away. That
and as we know in our prime brokerage business, investment is a balance of cost, latency, execution quality, liquidity, a whole bunch of stuff which we as kind of prime broker help seek to help clients kind of understand it. It's good to focus the competition on that rather than just the pure elements of the technology. If I can ask you kind of theoretical, if GPT-6 entered Liquidity Arena tomorrow, do you think it would actually win? Or is that component of infrastructure, execution, risk management, do those elements matter more or less less than the intelligence alone?
I think the answer may be no. Just like the second phase, that even a very non-ordinary persons with just like the moving average strategist can earn money. The directly link between a new better model and the winning of the trading are not what actually needs to be solved here. Is far more about the engineering problems and the system problems actually, and those are more specified than the people assume. And even a better model may only deliver values when it is placed in a right position with right systems. And that is why we plunge Liquidity Arena into the RapidX and a real prime broker execution. A smart model means little without a real market infrastructure behind it. I think the RapidX can give you this system to make your dreams be true.
Yeah, that's right. Without tests in real life, you can't be sure whether, or you can't validate whether your theory or your model will perform in reality. So this is absolutely the purpose of Liquidity Arena. Thank you for that. Maybe to Bing, many competitions reward best strategy. Liquidity Arena evaluates execution quality, risk management, and system stability. Does that better reflect on how institutions actually evaluate AI trading systems?
Yeah, I think simply because trading strategy have their own regime, right? So some for the next 3 months, certain strategies just won't perform, but it could be a hidden gem. I think for a good design of a trading competition, the goal is to identify the high quality trading team, trading strategy, risk management. So to that end, by only looking at the P&L is not sufficient. And you need to also look at how they risk manage, how do they execute the trades, how well the slippages are minimized. So all these are pretty standardized, aspects of when it comes to evaluating a good strategy. And this is exactly how the institutional investor look at a trading firm or a trading strategy. Everyone understands that you for the next 1 year, maybe a buy and hold strategy will not work that well. But that doesn't mean that your methodology or approach is flawed. He's considered the best trader ever, but it's not like he's making money every year. So it's as simple as that.
Right. And so in this kind of interesting topic of you were a CIO before, and so you would evaluate proposals and strategies. If an AI agent was presented to you and it produced incredible returns, but nobody could explain to you why that was the case, would you trust it as a CIO? Would you commit capital to that? It couldn't be explained.
I think this is actually a very good question. I think that as a CIO, I probably will treat traditional algo strategy and the AI-driven strategy very differently, simply because the algo trading, I put more trust on the backtesting results. Of course, live results matter most, but for the algo trading, I think the backtesting makes a lot of sense to me. But for AI, the difficulty is the AI simply just cannot backtest. There's no backtestability because the AI trained up to date and has all the human knowledge in the past. Then if you use today's AI model to backtest any strategy in the past, it already has this forward-looking knowledge already. So you simply cannot backtest. So then you have to totally just rely on the live trading results. But given AI is only short-lived for the past 2-3 years, and the people probably intensively start using AI in investment for the past 1 year also, live trading results are just not long enough. So if the AI can show enough explainability, that's definitely better. But for AI-driven strategies, I probably will wait to see a longer live trading P&L track record. That will be a necessary condition for making investment there. or you make an investment in the AI driven strategy.
So less the explainability of it than the trustability of it on proven record, right? That's what you're saying.
Yes, yes. I think we for our Liquidity Arena, for our track A component, we do have a process of seeing the reasoning log, right? I think if we can distill the essence out of these reasoning log, that will help, I think, me or the industry to sort of have another angle to look at how whether an AI before it has a long enough track record, how an AI is trustable or not.
And do you think that kind of logic extends to the other side of the wall? So this is large money allocators, sophisticated private professional investors, totally not retail, but this is the institutional end. How much do you think explainability matters to them versus just performance record?
I think the larger the institution is, definitely the more questions we'll have. Whether these questions are smart enough or smart questions or not, it depends. But yes, as far as the process is concerned, if you run a AI strategy and you want to raise money, you should try your best to distill some explainability out of your model and show to the institutional investors. That'll make things a lot easier.
Finishing off this section about the AI competition, question for Lony. For developers building AI trading systems today, many of them, of course, participating in Liquidity Arena, our great competition. Where would you recommend they focus their time? What opportunities remain open?
I think it's still a very difficult question, and honestly, I can't give an answer. But what I can say is, well, my own interest is I'm curious about whether we can take a general purpose LLM, just like we transfer the Minimax V3 we used and combine it with the carefully created and clean the reference data, and along with the skills-based workflows to give this model a vertical domain capabilities in the specific fields like trading, and the ability to pick out the effective signal from our market environment and make it be practical models to do the trading.
Great, and let's hope the some of the competitors get to listen to your advice and can help them to get an edge in the competition.
I hope that. Yeah.
Okay, great. Thanks for that. We kind of get to the next topic, kind of looking ahead. So let's kind of go for a few predictions. Lony, imagine it's the grand final of the competition. What kind of AI agent would surprise you the most, and what kind of dark horse or unexpected event are you secretly hoping to see?
I think it's very simple that I would like to see an agent that built on well-designed harness architectures and which combined with a very carefully designed data set and the skills designed based on the skill-based workflows. I think that may show me the real decision robustness strategies.
Interesting, thank you. And Bing, any thoughts on that?
I think any winner won't surprise me. I think what will surprise me is some disaster. If like on day one, some AI-driven agent just crush the market or crush its own account, get liquidated on day one, that will be interesting to analyze. I think that provides some data points for us as a lessons.
Okay. Well, the competition has guardrails and has kind of boundaries. So let's hope it won't crash the market. But yeah, one that might kind of run unexpectedly could be interesting. And that's, of course, data that you can use to learn from. So it would be good. That brings us to the end of the podcast. I'd like to thank you both so much, Lony and Bing, for your insights. It's been a pleasure speaking to you. Every technological revolution changes how markets operate. Algorithmic trading reshaped execution, high frequency trading reshaped speed. Now AI agents may reshape decision making itself. Nobody knows exactly what the future of trading looks like, and that's precisely why Liquidity Arena exists. Not to prove that we already have the answers, but to create a real world environment where the industry can discover them together. Thank you to our guests. Thank you to everyone who has joined us and is watching, and we'll see you in the next Liquidity Arena AMA.